As mentioned in the outset of Show E, we're breaking down our sections into smaller shows. And this week on Chalk Talk, we're talking commodities in RMB on the mainland and how this fits into some of the Belt and Road and something that came out a long time ago called the Chinese Dream. So there are 4 commodities exchanges. There's the Dalian Commodities Exchange. They do agricultural products such as corn, soybean, palm oil, live hogs, and industrial commodities such as coke, iron ore, and PVC. There's the Zhengzhou Commodities Exchange. Then there's 2 in Shanghai, the Shanghai Financial Futures Exchange, we've mentioned before, CSI 300, CSI 500, and the Shanghai Futures Exchange, non-ferrous and ferrous metals, energy, chemicals, and precious metals. If you've been paying attention, it's not hard to see the long-dated and systematic approach. If you were drawing up a plan for the largest workforce with immense natural resources, you would A, build out infrastructure at home and abroad to ensure domestic manufacturers could export. That's Belt and Road. B, supplant the primary currency that global commodities are priced in and try to secure the most precious from the rest of the world. That's rare earths. And C, export ideology and policy by tying these products and projects to acceptance of regional issues. That's where this commodities onshore in renminbi and the Belt and Road come together.
I think right now on the commodity is very important to China. Think about it as common sense. China is a huge manufacturing country. They just need the commodities, the import and the export. From our statistics, 1,200 public companies in Asia market, the disclosure activities related to the commodity future market. And on the other side is a common market, as we know, is get a high volatility. So this is tens of thousands of companies involved in the market, but they face a huge risk every day. That's why they push the commodity future market get increased and try to find the price and try to hedge the risk. So as long as China builds the largest market, I think most of the people can participate in a pretty fair way to do the business and reduce the risk. I think Zhong Han Indexes is the first company to build the professional commodity indices.
Right. But in order for the commodity market to be really useful for hedging, you need to have producers as well as speculators. So I understand a lot of the commodity activity on the mainland is purely speculative.
That's true. In the early stage of the future market, purely the speculations. There are more and more like the private fund. All of them, they talk about the fundamentals. So they research very deeply. Even no matter they make a long decision or short decision, they're all based on the fundamentals to think about that. And I see the market efficiency is could price in huge news or big change within probably a few seconds. Yeah, so that's so quick. The solutions is we really provide like the use of the private fund for the commodity to help them to do the hedging, which is much helpful.
Do you see the commodities markets on the mainland joining with the commodities markets globally towards getting foreign QFI investors involved in the commodities market as well?
Yeah, that is 2 big trends in the commodity. 3 trends in the commodity market right now. Number 1 is the commodity get more and more in the market. So right now it's almost 60 commodities in the market. And secondly, they open international investors. So right, is have a totally 6 commodities that could open to the international investors. So and the third trend is derivatives. It's get popular, and options, especially options, get popular in the market for the single commodities. But the problem is that most people don't know how to use it effectively. It's a good opportunity for the investor education area.